the unchanged rate yesterday, and most economists only expect a rate decrease from the middle of next year. Now, for more the impact on property owners, let's talk to Harry Nicolaides from Century 21. Now, Harry, thanks so much for joining us this morning. We know people are struggling to make ends meet, and property owners even more so, with much higher bond repayments since 2021. What trends are you seeing in this regard, and has there been more distressed selling?
Good morning, Melissa, and thank you for inviting me. Yes, there undoubtedly has, unfortunately, and I need to say this is not because of the higher interest rates only or solely. Our consumers have been constrained with regards to energy costs, food costs, insurances, medical aids, etc. But sure, the interest rates hikes have impacted property owners. And there have been more distressed sales, unfortunately, in the last 2 years. And that's especially in the segment of below R1 million. And it's very, very sad. You know, we've had these people entering the property market for the very first time post-COVID, low interest rates, and to find themselves now in a situation where on R1 million bond, they're paying close to 3,000 Rand more per month, over and above their normal living costs. That is a sad situation.
Now, would you say it's a buyer's or seller's market, and those who are selling, should they prepare themselves for lower values for their properties?
Yes, definitely. It's a property cycle that we're in, and currently it would be the right time to buy. So we call this the buyer's market, as sellers can't achieve the prices they desire, and if there are buyers out there who have got a sizable deposit and meet the bank's criteria with regards to affordability, now would absolutely be the time to purchase them.
I think this ties into our next question about prospective homeowners, and you think this is a safe time for them to buy. As some economists do say, we've reached the upper limit of the rate hiking cycle, but it doesn't necessarily put home loans within closer reach for most people.
Well, look, I'll answer that question as follows. Yesterday's MPC meeting is good news. So although there's no reprieve or relief for consumers with respect to a drop in the interest rates, it is good news for us in the sense that it seems like, because they've kept interest rates on hold again, it seems like our interest rate hiking cycle has peaked. And that's what we've been waiting for very many months now. And most economists agree that we have now peaked. It's not going to get worse than this, and we should see interest rates start dropping towards the end of the second quarter of next year. So, although no relief right now in our pockets, the good news about yesterday is that interest rates have peaked. But coming back to your question, the banks look at affordability, and there's no doubt that if anyone is wanting to get onto the property ladder or to upgrade or downgrade their premises, now would be the time to act, and especially for buyers. You know, with people, with sellers becoming more realistic about their selling price and becoming more negotiable, I think now for buyers, this would be the last few months available to them to actually go out and conclude some good deals.
Thank you so much for your time, your advice, and your insights. That was Harry Nicolaides, the CEO of the real estate group Century 21. That's all from my side for now. Back to Maria.